The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, welcome to Tuesday's webinar. It's just about time to start the trade of the week. Before we get going, let me know in the questions panel if you can hear me and see that first slide. I see Mike has already said yes. Hey, Randy, Todd, thank you. Thank you, friends. Before we get started in the afternoon sessions, we ask a question just to find out who's in the room. Do you currently have an active Trade Ideas subscription, yes or no? Click on the appropriate reply. And while you're voting, I'll remind you that you're muted. You need to use the questions panel. We can't hear anything you're saying. So use that questions panel whenever you want to learn something. If you want to see something demonstrated from the presenters or have them give an opinion on a symbol, wait until they're taking questions from the audience later on. Otherwise, if you're fine with a typed out reply, just ask at any time. So it looks like over 60% are reporting as having subscriptions. That's fantastic. Those of you that don't yet have a subscription, we do give out a discount code. It's a promo code later on in the webinar, so stay tuned for that. It'll save you some money if you decide to start a subscription. If you're a subscriber, are you on standard Trade Ideas or premium? The differences are premium gives you access to the AIs, the AI channels, the ability to backtest, the ability to auto trade AI strategies, open up to 20 concurrent charting windows, access the RBI, GBI windows, all that kind of good stuff. So it looks like about 60% already have premium. Those of you that are on standard, that promo code we give out later on can also be used to do an upgrade. So click that button. It should have hidden the poll. Are you still seeing it there? Maybe try sharing your screen out again. It might knock it out. So we're going to record the webinar. Yeah, there we go. We're going to record the webinar and have the recording up later on tonight or tomorrow morning. You'll get an email reminder tomorrow with a link to the playlist where you can find that recording. So stay tuned for that. I'm going to go ahead and start the recording and let your host take over. Your hosts, as usual, on Tuesdays are Steve Gomez and Andy Lindloff. So say hey, and hey, Andy, Steve, what's going on today?
All right. Hey, Scott. Thank you. Hello, everybody. Hello, Andy.
Hey, Steve. Hi, Scott. Hi, everybody. How are you?
All right. Let's do another week of the Trade of the Week webinar. Welcome to our desktop here. Let's get going. Trade of the week. Just a reminder that Andy and myself are independent traders, but we're also employees of Trade Ideas, which is a software as a subscription company. So things we talk about, things we look at are never to be construed as financial advice. It's just our opinions. And we'll leave it at that. All right. And as I always mention, Andy and I have been using this product for 17 years, and we've seen a lot of changes come and go. And we also recognize that it's a powerful product that requires a little bit of attempt to try and get familiar with it. It can be daunting at first. Our pro download version can be daunting, but we want to make ourselves available, and we do that in many ways to get you guys up to speed, because it really does take 3 or 4 or 5 days to kind of get a feel for how you want to custom tailor this platform to suit your needs as a trader. And of course, every day in the traders room, Barry Anderson is extremely generous with his time and often helps people right on the spot. If you miss that, we do have the afternoon webinars like we're doing right now, or evening if you're on the East Coast getting snowed in. But these are more content driven. The place you're really going to get your experience help is the daily support sessions at 12 noon Eastern. Each day, one of the 5 or 6 of us will fill in for Barry there at noon and just field questions. And so every 24 hours, we're available if you to come in and ask questions and let us demonstrate something for you that you might need help with. And we do recognize that not all of you are able to come in at noon. So we're going to be talking about some expanded hours and some additional hours for access to us, because we are growing. What you're seeing out there with the Reddit people, there's another 7 or 8 million people who just maybe discovered the joys and the roller coaster emotions of trading, and they're not going anywhere anytime soon. So they're coming our way, and like rightfully so, to try and get some tools to help them survive. So we're going to try and expand that access to you guys in the coming future. And there's just a reminder, that's the URL down below, trade-ideas.com/live is a redirect to the YouTube live feed that's at noon each day. So hope to see you. All right, man and machine combined. When Andy talks about the AI in a minute, it's a perfect example of how the new world we live in is a perfect symbiotic relationship with humans and machines. The humans really can't do as well on their own without the machines, and the machines certainly can't do it as well on their own without the human touch, especially when it comes to trading. We talk a lot about exit strategies. The AI is great at getting us into some ideas in real time, but once we're in, the human is much better at managing the risk as new data becomes available and the nuances come forward. So always got to use that slide as the intro. All right, so we'll do agenda for February 2nd. Market recap. Boy, it's confounded me. I'll ring that bell and tell you all about that. Andy has some thoughts on the AI recap. I think it was a little bit kinder to us this particular Tuesday, which is nice. Trade of the week. This is going to be a fun one. So there's a lot we can talk about on this one, and we'll get into that. And then I'm going to revisit a alert that I've kind of pulled back out of the ashes a little bit from today's noon session, and a lot of good feedback from that. So I figured, why not at least kind of continue that into the afternoon session for people who haven't seen it. It's a swing trade real-time alert, which is kind of unusual. We'll go through the A table and scan, see if we can find 3 or 4 or 5 maybe nuggets for good setup, and mark those up for a possible price alert, and leave the webinar with a couple of decent ideas. All right, but to start with, some of you guys, were with me yesterday in Jamie's webinar, and totally different look yesterday. I'm going to go to the 15-minute chart here, and I want to call your attention to yesterday in Jamie's webinar. I was talking about how for the last 3 days, the market was under pressure. It was basically on the wrong side of the 5-day moving average, which I've been using a lot more of lately. And I said, that's got my attention. Well, yeah, it had my attention because, I kind of bought into this VIX thing. I was long VIX for a few days, and yesterday it just felt like I needed to get out of half, and then today I had to get out of the other half for basically a flat. And again, this market is very strong, very confounding. Thought I might have had something here, but I wound up making a little bit of money and scratching the second half. But once again, Charlie Brown got the football yanked from him with Lucy, and the market did it again. So let's go back to the underlying, which is the strength of the S&P, and it just blasted right through those lines that I was marking up in Jamie's webinar yesterday. So I'm back to cash. I don't really have any long positions either because I've been doing this for a long time, and this market has me a bit confounded. I know I've probably used that word a couple of times, but this volatility in here is not easy, you guys. We got chutes and ladders and gaps and wicks and all kinds of nasty stuff. And so I'm just going to psychologically clear the decks, go back to cash, and just kind of let everything sort itself out for the next few days and see how things set up. Starting with this afternoon, we'll look at the A table and see if we can find a few ideas that might be not so tricky. But the point is the market recap that I'm doing here yesterday. Let's just go back one day and click. There we go. Oh, one more day. Come on, Steve. There it is. Yesterday, we were still under all these moving averages. I said, what do I need to see to change the tune? I need to see candles getting back above and closing above these moving averages and getting out of that spider web and getting out of the armpit. It only took one day. So that's extremely powerful. NASDAQ even more so. So I was leaning on the wrong side of the market. And it's not the first time I was wrong. It won't be the last. But I just had to kind of clear the decks and appreciate the extreme bullishness of that candle to just pop right back out of these weeds. It usually is not that easy. So that tells me there's a lot of underpinning strength in there. And the last thing I'm also going to do is really start to chase. So I'm going to look for things that are setting up. And that's that for the market recap. Unless Andy wants to add something, we can check in on Amazon. Looks like they're blasting higher after hours. So NASDAQ's probably going to have another good day tomorrow.
Yeah, Steve, there's not a lot to add. I like you was also kind of bearish. I do still maintain a small position in SDSs, but yeah, it was not going to take me much tomorrow to get me out of that trade. But it's something that I'm sorry, I was kind of looking at the Holly trades. Did you go over your VIX trade?
I did.
Okay.
I mentioned how that I fell for it. And I took half off yesterday and scratched the other half today, and Charlie Brown, the football, and the whole thing.
Yeah. And I, like you, like I was saying the other day in my webinar, I'm seeing a lot of disconnect in the market, a lot of decoupling of some stuff. And yeah, it's kind of strange. I mean, I'll still look for opportunity. I will not chase in this market, but I will look for opportunity on stocks maybe that have been beaten up or maybe, have not ran like a lot of these high profile stocks have recently. But
cool.
Anyway, that's about it, Steve. Not a whole lot to add.
All right. Well, before you take it over, I'll add it over here. For the person who added VXRT, we'll take a look at stock charts at the end. So just keep an eye on that one and resubmit it. And then a good question from Robert, because I kind of riffed on the 5-day moving average, and he asked, what is it and the significance of that? On my daily, I've got a 10, a 20, and a 50. If I put a 5 in here, it's just too much. And my friend Brian Shannon showed me a little trick. The 15-minute chart, which I like, if you go in and create a simple moving average and then make the value 130, that's a perfect 5-day, 15-minute candle average. And so it's this rolling intraday view. And you can see how it's kind of come into play. It comes into play a lot. Came into play there. It held the NASDAQ down. And that selling that happened at the close yesterday, boy, it was really trying to defend that same level yet again. And then, as I mentioned earlier in the SPYs, kind of the same thing. Very much right on the screws, pretty much right there. The sellers jumped in. So the 5-day moving average is something that I do watch, and I like to express it on the 15-minute chart candle there. So that's for you, Robert. Can you show the setup?
Oh, go ahead.
Not sure what setup that was, but I'll go ahead and pass it over to you, Andy, and we'll keep moving.
All right. All right. Holly today, kind of a mixed bag. There, actually, I think the actual action was much better than the numbers present. You can see the conservative here column, and if I sort by moderate, they were pretty even actually. I know this OSS, which I will discuss. Speaking of ones that look a lot better than they appear, especially if you're trading moderate profit and you see it got stopped out. But we'll talk about that in a minute. But let's just kind of go through the numbers first. The Holly AI, and I'm not going to spend too much on this. I am like who is it? Somebody that recently said, why don't we just have one Holly? I've always felt like we should have one Holly. But nevertheless, it performed best in moderate. Holly 2.0 performed best in conservative, and Neo aggressive, which we really don't like to discuss. As a matter of fact, I think we're going to be taking that out soon, which I'm all for that. If we don't have it as an option in our Brokerage Plus, I don't see any reason why we should have it on our platform. But anyway, let's excuse me, let me get a drink of water here.
By the way, I dropped my 15-minute chart window, the cloud link. So anybody else besides Michael who wanted a copy of that, look in the chat window, and you've got the cloud link to my 15-minute chart if you want to utilize that. It'll be the same setup on your end.
There you go. Well, getting back to this OSS, I want to kind of focus on it because the volume was there. You can see the relative volume up here at almost over 34 relative volume. You can also see the big, huge volume bar. Great call by Holly right here before it goes to high, before the big volume came in. Okay, you had a beautiful call right there at 483. Now, if you were to hold this and be foolish and not take any profits after a 25% gain, all the way up here to basically 583, $1 higher than where you got in, and let it come all the way back down to the flat, you would have hit a stop barely right there. But it did tag it. But the point I'm making is you cannot discount this call. I mean, sideways action, you get the call, it finally explodes, and then explodes again on huge volume. So I know there was people in the room and the traders that took advantage of that move. So the opportunity was far greater than the conservative profit you see here, and definitely far greater than the moderate profit, which was officially a stop out. So that was a real good one from Holly today. LVS, I saw it when it came out, kind of a possible trend reversal. Okay, after being beaten up pretty much all last month. Once again, had a little volume in it today. All right, you had 2 relative volume, stronger there in the morning. There's your beautiful call right at the break of the intraday high after 35, 40 minutes of trading. And then look at that beautiful follow through for the next basically couple of hours and going sideways. So great. So a lot of opportunity right there in LVS. And not only that, we had some shorts. They had some AG. Okay. I thought this was very interesting, being that silver was in play. So let me just click on this AG, and I thought was a decent call this morning. Sell signal right there. Had a little bit of, right. Yeah, I got it right. You're right. And other than that, I'm not going to go through a lot of these. They're just a mixed bag of tricks in here. Some
I have
up,
a thought on
some
one.
Down. Sure.
Somebody always asks me, how do you find swing trades? Well, the AI is not designed for swing trades. It's designed to call out trades that were statistically tested and back tested and machine learned for an end of the day. But many times we'll see something on there that I might not have otherwise seen on another scan. I'm like, oh, that looks interesting. And that stock is PVH.
Yeah, I like that.
That one? Yeah.
There you go. Maybe some capitulation yesterday on that huge volume and a doji there.
Yep. And what you can't see is on the. I'll bring it up when you send it back over. I'll show you on my screen. It's battling that 5-day. It's battling that 5-day moving average on my 15-minute chart.
Okay.
And so it's kind of just after that big wick and wash, big candle, big volume. That's usually the kind of candle you look back on a week later and go, oh man, that was a pretty glaring bottom. I should have looked at that harder.
Yeah. Yeah, for sure. I see that for most definitely.
Yeah.
All right, but that's about it, guys. Overall, a good day for Holly. Few stop outs, but nothing major. All right, let me send it back to you.
All right. So let's talk about the fun trade of the week that didn't work yet. It's still in play. By the way, remember how much fun we had when we looked at FUV a couple weeks ago? Yeah, it's not going to be that easy this week. They're going to make it hard on us. All right. So I've been watching silver a lot last week, and towards the end of the week, started being a lot of talk. People were cleaning out inventory of physical silver over the weekend. And the chart itself, we'll start with SLV. The chart itself if we just back up a little bit, was starting to show signs this day right here. That was a big breakaway day on volume, and something happened. Well, for those that don't know, SLV is an ETF that basically they say it tracks silver, but there's nothing backing it. It's really just a nonsensical paper asset that they just seem to be kind of like the dollar, just seem to print it when they want it, and that. So going into the weekend, we couldn't find anything, and this is really the precursor. Again, if I go back to the S&P, what did they look like? All right, 2 days ago, this is what we were looking at. All right, I was bearish. Andy was bearish. We had a closing candle here, very important closing candle under the 50-day moving average. This is the kind of thing that I thought would set alarm bells off in a lot of funds. So we looked for longs, we looked for some names. We couldn't find anything. We couldn't agree on anything. We couldn't find anything. It's just the day wore on. I just thought, let's just mix it up a little bit and try something a little different. Because, guys, I was very close to calling cash for like the 7th time in 3 years. When there's just nothing there, I say cash is a position. That's no fun sometimes. So, we came up with the idea of something a little bit more out of the box. All right, here's some of the caveats we tried to say going out. This week's going to be very different. Please read carefully. A lot of talk about silver going into the weekend, but we made some serious points here before you consider taking a position in this, and use a smaller amount of shares that you normally would to offset the volatility that we anticipated. Be prepared for wild swings, only risk what you can afford, which we'll talk about in a second here. The ETF will likely gap up Monday. Well, we thought maybe 3 to 5%. This particular one, PSLV, gapped up 11%. All right, so kind of blew up on us Sunday night as the content was submitted to the marketing department and it was all in the hopper. There's really nothing we could do Monday morning. And so what happens when stocks gap up that much? And I want to just also remind you that PSLV is not like SLV. We chose this one because there is actually a physical backing behind it. And I'm going to show you a few things kind of interest. Well, the first thing was this PSLV gapped up higher than SLV did. And then by the end of close yesterday, it actually held on to more of its gains than SLV. And the same thing happened again today. So there seems to be a bit of an underpinning buoyancy in this ETF name versus the SLV, because I think people trust that there's actually physical silver behind the shares of this particular ETF. But what I want to focus on is, first off, if you're new and you just saw the headline and you jumped in and you're new to trading, and you bought something that was up 11% on the opening tick, it's hopefully a learning experience. I didn't do it. I wouldn't do it, but it actually kind of created some decent content for us. And here's what I'm going to suggest. All right, so here is the weekend. And we anticipated maybe a gap up here around 10, 12, 15, 10, 15 cents. We had a giant gap up here at 11%. Now, that really, when you see something like that, it should just freeze you in your steps, and you should be thankful you're not short and having to manage that position. But in our case, it was like, head scratcher. Do I jump in and chase this, or do I wait for an opportunity? Now, those of you who have been listening to me for a long time know that I'm a staunch believer in the 10-period moving average on the 15-minute chart. I'm going to go ahead and click over here on my B+, and it's going to show you where we took the trade. All right, at 10.25. Why? Because that's the area at which it's very close to the rising 10-period moving average. Talked about this a lot. When you have a gap, usually the inflection point of where price meets the 10 SMA is going to be an interesting decision maker. Now, on the flip side, if you were short, and I'm sure somebody was short this, you're a deer in the headlights. This is a horrible loss for you up here. And the last thing you're probably going to want to do is just pound out of it. You're going to maybe want to wait and see what happens. And so that was hopefully the caution and the patience that some of you may have exercised. If you didn't, well, let's use this as a learning experience. Going forward, when you have a giant gap like this, there's so much space between the price and the rising 10 period. Just wait. You're going to be so much happier if you just wait. And in this case, we shaved off 75 cents there. All right. and we've really tightened our range. Now, I want to go back to also saying, I said only risk what you can afford to lose. And the downside on this one was to say this 10-period moving average is going to continue to rise, but we do not want to close beneath this 10-period moving average. So let's say you're somebody who says, I only want to risk $50 on these calls. Well, if you want to risk $50, risk $100. Let me delete that. If you want to risk $100, you're going to need 50 shares. If you jump in here at 11, you have a 2-point swing, a little bit less, but a 2-point swing for the most part. So you're going to need only 50 shares to make that thing work, because we said it is going to be volatile, and it sure did become volatile. So by waiting for that moment in time to bring the price action down and hit that inflection point, you can use that for an entry. Now, if I was short and in pain, I would have been waiting. I said, I'm not selling. I'm not covering this. I'm just going to wait. And I probably would have just covered it right there and just been happy with it, because something that gaps up that much, I'm honestly surprised it didn't bounce and move higher. And it took a little while. It tried, and then it got tangled up again. And then, as we said, the overnight gaps can be the risk. All right, so there's our current. So when we look at the chart here, we can see this third candle is kind of really far away from that 10 SMA. Look at the SLV. Damn near almost got it today. Did you catch that, Andy?
I did.
It's crazy. So there's a lot of flippage and sloppy, nasty riggedness, if that's a word, in this thing. But that's why we tried to choose the one that's backed by physical. And this one's holding up a lot better. So, a couple points. If you're able to mitigate and not chase that open and use that 10-period moving average, we're only 40 cents out of the money here for the moment. So we're still above that 5-day moving average. What does SLV look like on that 5-day? Oh, look at that. I remember doing the webinar today, watching this right here, saying, oh, the 10-period is pinching it. It's holding on to the 5, and then it just broke, came back, can't get above the 5. So there's another good example for those that might want to try and use this 5-day moving average on a 15-minute chart. But when we have an ETF that's backed by physical, a little different story there. So one, I'm glad we chose that over the SLV slop. Two, we're just kind of bummed that the trade blew up on the futures market overnight on Sunday, but hopefully we can use this as a learning experience. Whether you're short, that's the place to get out and cover and mitigate your losses. If you're thinking about going long, well, don't chase. Try and use that to lean on the next time, and it'll just work out a little bit better. Anybody asking anything that need to answer, or you want to add anything on this?
I got it all, Steve.
Okay, good.
Let me ask you something. What if somebody is still in this? What would you tell them if
somebody's still in
advice?
It? Okay, so if somebody chased up here,
let's say they bought it where you did.
Okay, well, so the point is the rising 20. We just don't want to see a close below this rising 20-day moving average.
Right.
That's it.
Yep.
Not to deviate
That's
too much, but
it is.
I bet some people want to know, like, what when we talked about GameStop and Jamie's yesterday, I said, look, guys, look at GameStop. It's trying to hug this 5-day moving average, and then it gave it up at the close. And I said, well, it broke that, guys. It looks like the next stop for GameStop is going to be the 10-day moving average. It blew right through that, and it hit the backstop of the 20. But in our case, to answer your question, Andy, we just don't want to see this rising 10-period moving average lose the price action. It needs to hold the price action into play, depending upon what your entry was. So not one of our favorite ones. It didn't really work out the way we wanted to, but it's only Tuesday. This thing could change its tune, but it happens.
Yes, I mean, at least you warn them that it's going to be volatile like this. And play small size. Yeah, we try. Yeah.
Sometimes people don't always read, but we did our best. We'll not pick something so volatile next week, but I thought, let's just try something. But it did work out for interesting content. Again, I really feel strongly about using this, because you guys are all going to find yourself in a position where you're on the wrong side of something and you want to figure out where your best place to exit. Just wait for these two areas to meet, and that's usually going to be the inflection point. All right. So where to next? I think I wanted to talk about We talked about the anatomy of the giant gap up or down and how to handle it. Let's revisit. So another thing I was doing this morning in today's session is we've talked a lot about this A table, and people often ask, well, how can I get a good swing trade scan out of Trade Ideas? And when they say, I want to be alerted to it right away, which is something the AI will hopefully be doing soon when we rebuild our architecture to handle that, there really is nothing. And it's usually what I've said is it's just coming through and looking at the scans. And if you see something you like, then we'll come in here and we'll just put a price alert, and we make sure we won't miss that price trigger. That's one way to do it. But I have a scan that I built, and it basically takes the A table and creates an event that tells me you might want to consider buying here. And I've talked about this guy before. And the idea is, these are A table type charts. Let's go in and take a look. So notice, it's a long scan, but notice, new low, that's the event. I'm literally looking for a contrarian entry to try and really maximize a cool, really solid entry. But in the filter standpoint, there it is. Same as the A table. 80 percentile stock composite rating. I want to see the B students and the A students. It takes care of all the other stuff. Moving averages, technical ranges, a couple fundamental points. So that one filter just encompasses really good charts. But then what I said is I added this 10-day moving average, which I talk about, and we have a filter for. And so for the most part, these are strong stocks that have moved up in the last 20 days, at least 10%. But in the moment in time, they're making a new low right into the 10 SMA. So the minimum is 0.1% below the SMA, and the maximum is 0.05% above the 10 SMA. That's my little window that I want to see new lows occur in. And more specifically, I like to see those new lows happen in the first hour of the day. That's when the stock hunting of these algorithms, they go after your good till canceled stop orders, and they usually run them out in the morning and reverse them because, again, these are good charts to start with. It's just a momentary hiccup. So what I'm trying to do is time the jump rope perfectly and catch these things when they have given a morning hiccup in the morning. So this particular one, what we'll do is I want you to just focus on the arrow, which is going to be close to the low of the day, and that actually signals the moment in time at which a low drove down and tagged, there it is right there, the 10 SMA, the bottom of that tail. This isn't one of the cleaner looking charts, but I have one in here that does look pretty nice. Let's look at all of them though. And by the way, that was the first one came through at 43, we'll call it 47.37. So that was, we're talking like right here. Oops, hang on a second. We're talking like something like that orange line, pretty good entry. Let's look at the next ones. REGI, that froze up on me. It freezes up on me. I gotta give it a few seconds. There we go. REGI. So REGI had a decent little bounce in the morning. Look at that, gapped up, suckered everybody in, drove it down, drove the shares out of there, and at what, 95.20? 95.20 was our first one, right about here. Popped right back up, but then kind of bled the rest of the day. Not a bad looking chart, but one more. This one didn't work quite as well, but it did find some support. This one was the juicy one. This was the one I really liked. Notice this daily chart. A lot of the charts I talk about, nice trend, gap up. Can't fill the gap, sideways, sideways. That 10-day moving average rises up and comes into play and starts kicking the price higher. Well, same thing. This one was nasty. They gapped the stop up, get everybody excited, and then drove them all out. And that orange line is actually where you see the entry. And that orange line corresponds to, we'll just delete it on the daily there. Hang on. There we go. Look at that. Just the minute it tagged that 10-day moving average, that was our entry. So these are some pretty slick ways to get a nice contrarian entry on what would be hopefully a safe daily chart that's moving up from lower left to upper right. Yes, the score thing. Rob brings up a good point. The score is just a great filter, and we're going to talk about that in a minute when we go through the A table. But this is just an interesting way to try and catch things. And again, it was designed. I sat here and I said, how do all these algorithms seem to just drive the price down on these really nice charts And then once they seem to tag that 10-day moving average, all systems reverse course, reverse engines, and they start buying. How can I alert myself to that moment in time? Because what we're doing is we're giving ourselves a much better entry point rather than waiting for, going back and drawing the obvious line there of the range. And then all of a sudden you're up here and your entries are up here instead of down here. Do every single one of these work? No, but as you guys get better at trading and learning how to manage risk, which is all it's all about, whether it's the trade of the week that's given us trouble, it's just about managing risk and being around to stick around for the next one. So yes, the score is a great filter, Robert, we agree. Let me share this. I will put it back on real time because you're not allowed to show something without sharing it here, which we will do. And I will drop that in the chat window as well. We'll call that the jam down by alert. Okay, so that is in the chat window as a cloud link for anybody who wants to do it. All right, so let's downshift back. Again, this was a derivative of the A table, and the A table has been where we have found a lot of our, should we wait for the crossing? No, there's nothing really to do, Elena. When the price hits that level of 130, just look at it as a point of interest. Is it going to be a level of resistance? Or as you say, if it trades through, I would wait for at least 1 or 2 candles to confirm that it did close and trade through. But it's nothing more than an area of resistance that can act as support and resistance, an area of interest, I mean to say, an area of interest. So back to the top list of the trade, of the top list of the A table, look at how simple this is, right? It's just an 80 score like we had before, average daily volume of 1 million, and the short float of 10. Well, what I want to do in this segment here, and then after we're done with this segment, you guys can send in some symbols and we'll look at them. We'll look at about 10 or 12 on the way out. But for now, we're going to just dissect this again, and we're going to run through and see if we can find 4 or 5 really decent setups for tomorrow. But what I'm going to do is I'm going to take the basic A table here and I'm going to modify it a little bit. It seems like there's been some interesting things that might be if I lift the rug a little bit and take it down to 75. Let's take the C plus students or the C students and see if we can find anything that's in there. And I'm also going to just rule out anything under 20% short the float. Let's just see what's still left in the bag with at least 20% short the float with a 75 score rating or higher. Give us a few different names to look at. Oh, give us a lot of different names. I'm going to go through some of these kind of quickly, and I'll stop on the ones that I do find interesting. Let's pull this over here and bring this up. All right. Not too many. All right, iRobot. It's a pretty nasty wick. It's actually not bad. I'm gonna put an alert on that one because if this thing decides to get goofy again on the short squeeze, we'll see. But technically, once they do that, seems like they might be done. Oh, I wish I had seen this one yesterday. Look at this. You take out that one candle.
Nice.
Look at that.
Yep.
Guys, if I'd have seen this yesterday, we'd have been marking that up right there on the high, and then it would have just been a nice move. So what do I like about this? Big gap up, day and a half. If you buy up here, you're chasing, let it give it back. 3 days is just perfect. It never even really touched that moving average, which is even more of a repellent to tell you how strong it is. But I don't really want to chase here, but that would have been nice yesterday. So imprint on that. Nope, this one bled below the 10. We don't want that one. Not chasing that.
A tough one.
That's a tough one. I'd rather see a wick. I'd rather see that close. I can't stand all that red. I don't like all that red. Not going to chase that. That's just broken. Let's zoom out a little bit better. Get a little better perspective here. There we go.
That's
got potential. Yeah. Here's one where let's do this. Let's set the alert on a jam down and see if we can get a jam down on it.
There you go.
Rather than, yeah.
I like it.
Yeah. Just create our own jam down alert. Not going to chase. Angie's list. I would have liked this yesterday.
Yeah.
That would have looked, hang on. That would have looked pretty decent right there yesterday, but I'm not going to chase today. Zoom back out. Nope. Reversing. This is an old trade of the week, by the way. RVLV, The only thing is man, it's just how many tests of a trend can you give before you just maybe run out of steam? But I'll tell you what, this thing, I'm going to just say it once here. It's on this scan for a reason. It's still got a lot of shorts. So maybe they still have a little bit of work to do. We'll mark that one up. Not going to chase that. Not going to chase that. Not going to chase that. Now, I know there's a couple more on here that I liked. Let me, AG. Oh, there's our friend FUV. Hello. So 2 trades of the week we've seen come through. You know, again, that one would have been real nice yesterday. That would have been real nice yesterday. But alas, we're a day late on that one. But I just want to show you guys what would be good if we saw it. This is the one I liked. How's that? That's not bad. Really nice push higher. And what I like most about it, guys, is just the fact that it's got a nice symmetrical wedge to it. Just painting itself into a corner, waiting for the resolution, which is usually the same as the trend coming into it. So we're going to mark that one up for sure. We'll just put it above today's high. And then we're getting close to the bottom here. We found a couple of decent ones. Yeah. Dicks. Yeah. Ooh, God, that looks like a short to me, doesn't it? Yeah, I wouldn't touch that long with a 10-foot pole. That's pretty much it. We didn't get as many as I thought, but at least we stopped on a couple that looked really good yesterday, you know, so you guys can kind of visually imprint on that and see what looks good. And then it's a 1-2 punch. You just take the price alert and pop a price alert in there and you won't miss it.
You didn't go through any juniors?
Well, the juniors would have been covered in there. That was the A table.
Oh, that's all of them?
Juniors would have been covered. Yeah.
Oh, okay.
I upped the short float and lowered the score a little bit just to try and find what was in there.
And the price? Don't you have to do something with the price? Or not so much?
No, that's on the A table junior. All the same things are going to be in there.
Okay,
much.
I got you.
Yeah. So, you know, here are 4 price alerts, and I can share these, and I certainly will. And while I do this, you guys can start to send in some of your symbols that you want us to take a look at, and we'll give you the unbiased, unvarnished truth of what we think of them. But the price alert cloud code is now going into that. Remind me to dump these in that social channel too, Andy, when we're done.
Okay.
A lot of times people will watch the replay and they email us the next day, and my support staff's like, you know, maybe Steve, could you give us all the things you handed out at the webinar so we can give that? All right, you guys got some good stuff coming in here. So let's take a look here. We'll start with ZI. Yeah, ZI. It looks like we got a good handful of scans here. So of symbols, I mean to say, you know, that's a nice big long range saucer. Seems like it's a buy when it pulls back and, you know, it kind of digs in. Nothing special, but I can't see anything bad about it. It's above all its moving averages and it's looking good. Nothing
It's got
bad.
a pretty nasty average true range. I can see that.
Yes, it's very spiky. For sure. Okay, snow. Somebody asked, I saw this one earlier today. Yeah. Very nice break of the downtrend, and notice how it ran right smack into its 50-day moving average after a nice day and a half push. This is exactly why I like a day and a half move. Seems like that's all you get sometimes, but it'll probably regroup and try again, but not bad. Try the A table junior. Well, there's not going to be anything different on there. I'm pretty sure about that. So we'll continue here. ASLM and let's see. Oh, sorry, Sava. I skipped that one. Okay, so the question was, I got a $10 profit early on Sava. Does it look like a second day as possible? No, this thing looks like it's pretty much done. If it had closed at highs, possible, but I mean, what do you want? 20 to 60? Once these things double, it's like, yeah, I think the fun all happened today. As you can see, it broke that moving average midday. It is higher after hours. I see that, but you know, once you're in this range up here, anything goes. That's very squirrely. ASML and Spice, not bad. You can see the 20-day moving average certainly held on that one, and it's now fighting to get above its 10. It's got a still in the range, but it's moving in the right direction. The other one was SPCE, Virgin Galactic Space. got ahead of itself a little bit yesterday and gapped up today and faked everybody out. But look at where it kind of held. It held that 5-day moving average we were talking about. Interesting. PING. Nice breakout today. I anticipate some follow through tomorrow on that one. And if you have a good position down here, then maybe start fading out of it if you're a short-term trader. But that one looks good. TTCF is vexing. It's under pressure. It's under both moving averages, and it's also a new issue. So there's not a lot of data to go by. That wick yesterday could be built upon, and you just need to get back above this 10 and 20 moving average for that one. Sava, we did a double on that one. OSD, overstock long. Oh, I like that. That looks really good. That looks really good. As a matter of fact, I'll just come in here. You just pop a price alert above today's high. That's a very nice action. Consolidating right above the 10, and they basically touched it 2 days in a row. It's important for Andy and I to see that touched it yesterday, which was probably the day. Once these price algorithms hit their target, they have to. They're stupid algorithms. They have to have a target. They have to know what they're shooting for. And once they get there, and then everything switches around and they readjust. And but the point being is we really like to see when the price does reach down and touch that, like a person on a roof trying to find the step ladder to step on it and find some solid support. For some reason, the algorithms like to do that, and it's comforting when we see that they do that. Oh, Rocket, Andy, there's your favorite.
It's ugly.
Wow. That is one nasty chart.
Yep, that's
pretty much
ugly.
saying that's like nature just saying, "Stay away from me."
Yeah, you know what? And I don't know when they came out of. I'm not in that right now. I played it at 20 earlier, but did well on it. But yeah, after those red bars,
that's
nasty.
Ugly.
Yeah, they may be coming off out of the 6 month lock period. Yeah.
Every time they get a green bar, the insiders are selling.
Yeah, exactly.
Fire Eye, trying to work its way through the spider webs of those two moving averages. It's got some work to do, but it's creating a long, narrow range if it can do it. But it's still under a little bit of pressure. Oh, iBio, I've seen this one a lot in the chat rooms. Hanging in there, it's respecting the 10-day moving average. I'll say that, and hold on to it as long as it respects that 10-day. But this 200-day, I assume, right there is looming, and that again is going to be a waypoint for the algorithms. When they hit that, algorithms might jump in and say sell. So you could see some. And
I tell you, a red flag for me too is that going back to I guess November, you had that big old green bar above its 200-day moving average, and look at that. And the next day, it's just right back down. Yeah, that's kind of stuff just scares me to death.
Well, that's why these things are small and under $5. That's the trade like that.
Exactly.
iBio, Coppin a feel. Really nice push from yesterday. Look at yesterday. Let me. Oh no!
Going into the day.
God dang it! I get all ahead of myself.
Why does it do that?
I know, but I'm afraid to tell Julio because it's just going to open up a whole bunch of things I'm going to deal with. Chris knows what I'm talking about. Here we go. Okay. That would have been interesting. And just holding, respecting, and then this one might even have some follow through tomorrow. Very nice on that one. All right, a few more here. Anything that I've sent should be in the chat window. Oh, CYH. You should have access. COH looks like it's a bit under pressure. It's curling 10-day moving average, and it's going to have some work to do on that one. Overstock has earnings tomorrow. Interesting. Okay. BBIG. Well, it's respecting that 10-day moving average, isn't it? It got a little ahead of itself today, but not bad. As long as that seems to be the play right there. So keep an eye on what it's doing there. SLS. Nice breakout of movement today, definitely higher after hours. These are the kind of things you would expect to see follow through on. So we want to look left, and geez, maybe the first level of resistance, if this thing really gets going, could be, I don't know, 13, 14 range. I don't know what it is. I've never seen it, but big volume coming out of a tight range. You can't sneeze at that.
Trading up in after hours too.
Yeah. VXRT, a few more. You guys keep sneaking them in here, but Yes, very nice, but it's very extended. I mean, you got to look at the prices up here and the 10-day moving averages down here. At some point, these two are going to meet again. And it's more likely that the price is going to come back to meet that than the 10 days is going to keep following this thing to the sky. So great move, but get ready for some consolidation. We did that one too. And let's do two more. We'll do Lyft and then Bed Bath & Beyond. We'll do Plug and Neo too. 4 more, then we'll bring in Scott. You know what? We'll do 5 more because I do like that TGB. It's holding on, not bad. TGB, Dave. I did like it. I'm kind of kicking myself. Like I said earlier, you look at these pullbacks and that big spiky tail, and you go, "Why didn't I, get excited that day?" Because those ones that you always look back on. But at this point here, it's just kind of digesting. All right, 4 more, then we'll bring in Scott. Lyft, Bed Bath & Beyond, Plug, and Neo, and that's it. So the first one is Lyft. Under pressure, but it's fighting its way to try and get back through. But it's really come from a place of being under pressure. If it can post a couple more days above these moving averages and close, that would be nice. Oh boy, Bed Bath & Beyond is going to be a mess. Mm-hmm. These things are all pretty much broken, guys. The GameStops. Matter of fact, I meant to share this story. A woman I went to high school with, nice lady. When they come to you and they say, "Hey, Steve, is it too late for me to should I look at AMC?" And I said, "No, please, just save your money. Don't. It's just too risky." Yeah. AMC is a $4 or $5 stock, and they got caught up in this nastiness. And I know you're seeing fear of missing out. You're seeing friends making money and things. Don't think that this is an opportunity. This is broken. This is just, forget it. I mean, it's just as ugly as can be. There's nothing to be derived from that. So these things are all broken. So that would go the same for Bed Bath & Beyond. Maybe you might get a bounce off that blue 50-day. Who knows? You might be lucky. All right, 2 more, and then we're out of here. Plug, which looked great. Interesting. It looked really good back here, and then it kind of just fell back into the range again. Well, the 20-day moving average might act as a backstop. If it doesn't, these 4 or 5 days under the 10-day moving average, 5 days now, have got me a little perplexed. It's under a little pressure. So that backstop of the red 20-day moving average needs to kick the price back into play. Otherwise, it's going to start to break. NIO is the last one. Yeah, NIO's also falling under pressure. I'm seeing these things start to just bleed back into the range, and doesn't really get me excited about them. Since I like Dave Portnoy, somebody asked me about Penn. Penn looks really nice, and Dave should be sleeping very well tonight. Yep, Dave looks very nice. What does DraftKings look like?
Did it have a good day?
Yeah. Interesting. Not bad. Good volume, too. DraftKings might be trying to make a move. But not bad on those two. All right, Scott, I'm just about talked out here. And thank you, everybody, for the participation and taking it easy on me on the Trade of the Week goof this week. But I'll have a better one for you next week.
There you go.
Cool. Sounds good. Thank you, Steve. A couple of things on the way out. It's about earnings season, so make sure you got that ebook, TradeIdeas.com/earnings. Help you out with some strategies, teach you how to use it to your advantage. Just go to that URL and grab it. It's got some cloud links for you to import. Also, we had a podcast, the Trade Ideas podcast. Just had a new one out recently. So go ahead and search for Trade Ideas podcast wherever you listen to your pods and get that newest episode, and then check out some of the previous interviews we've done. And there'll be a new one out soon, so stay tuned for that. There's a promo code opportunity good this month. Good for 15% off your first month or year of Trade Ideas. Also good for an upgrade. So if you're deciding you want to move from standard to premium, go ahead and use that as well. And Steve Gomez can be found on Twitter at Today Trader. He's also at Trade Ideas, at QuantBot, some other handles. Trade Ideas Pro is the Facebook handle to follow and share everything you like with your friends. And send all your questions to info@tradeIdeas.com. It goes to our help desk. We will have a recording of this up later on tonight or tomorrow, so stay tuned for an email update tomorrow with a link to the playlist. Thanks, Andy and Steve. Have a good one.
Thanks. See you next time.
Thanks, everybody. I'll see you on Thursday. Bye-bye.